What's going on, everyone, and welcome back to Explain the Charts. Today, October 7th, 2025, we're doing an in-depth analysis of Meta Platforms, ticker symbol Meta. The stock is currently seeing some turbulence, trading around $707, down just over 1% on the day. There's a lot of conflicting information out there, so we're going to break down the latest news and then dive into the charts to see what the price action is telling us. First, let's talk about the news, which paints a very mixed picture. On the bullish side, analyst sentiment remains overwhelmingly positive. A recent Quiver quantitative report noted a median price target of $850, and Wells Fargo just raised their target to $837. Furthermore, some analysts see the stock as trading at a 20% discount to fair value, especially after Meta secured a massive $14.2 billion deal with CoreWeave to build out its critical AI infrastructure. This signals a strong long-term commitment to growth in the AI sector. However, there are significant bearish headwinds to consider. The stock has been in a downtrend for the last few weeks, with some reports noting a 3 to 4% drop recently. There are growing investor concerns over spending, particularly in the Reality Labs division, which is projected to lose a staggering $20 billion this year. Additionally, Meta is facing new regulatory scrutiny over its generative AI chatbots and their potential risks to children, an issue that has plagued them before. Perhaps most telling from a sentiment perspective, data shows that over the last 6 months, insiders have only been selling shares, with 0 purchases recorded. So we have a classic battleground: strong long-term AI growth potential against immediate concerns over spending, regulation, and insider selling. Now let's see how this narrative is reflected in the charts, starting with the daily time frame. Looking at the bigger picture, Meta has been in a powerful uptrend for much of the past year, climbing from lows below $500. The stock put in a 52-week high and an all-time high, right around $796 back in mid-August. That $796 level is now our key long-term resistance to watch. Since that peak, however, the trend has clearly shifted downwards for the short to medium term. We can see a pattern of lower highs and lower lows, which is the definition of a downtrend. A key support level around the $735 to $740 area, which held a few times in September, was decisively broken at the beginning of October. This former support will now likely act as a major resistance zone on any bounce attempts. The price fell sharply after that break, finding a bottom yesterday, October 6th, at around $690 before staging a nice recovery into the close. That 690 level is now the most critical short-term support. Let's zoom in on the price action since that August peak to get a clearer view of this recent downtrend. As you can see, after failing to retake the highs in early September, the selling pressure really accelerated. The break of that 735 support was accompanied by significant volume, suggesting conviction from the sellers. This pullback could be directly correlated with the news headlines gaining traction about the escalating costs of the metaverse division and the renewed regulatory focus on AI. The market seems to be reevaluating Meta's valuation in light of these substantial costs and risks. Now let's switch to the 1-hour chart to analyze the most recent price movements. Here we can see that steep decline from $740 down to $690 in just a few trading sessions. Yesterday's bounce from that $690 low was sharp, but it appears to have stalled out around the $717 mark. Today, the price gapped down at the open and has been struggling below that level all day. This tells us that while buyers stepped in at $690, sellers are still very active at these higher prices, preventing a full recovery. To get an even closer look, let's drill down to the 15-minute chart for the last 2 days. You can clearly see yesterday's strong rally throughout the day. Then, notice today's price action, a gap down followed by choppy, sideways consolidation. The stock is essentially trapped in a range between roughly $705 on the low end and that $717 resistance on the high end. This intraday range is the key battleground for the very short term. A break below 705 would suggest the bears are taking back control and a retest of the lows is likely. Conversely, a sustained break above 717 would give bulls confidence that this bounce has more room to run. So, let's go back to the daily chart to put it all together and talk about what to look for next. To recap the key price levels, our major overhead resistance zones are the intraday level of 717, the prior support at 735 to 740, and then the all-time high around 796. To the downside, our critical support levels are the intraday low of 705, the recent swing low at 690, and below that, a potential support area from February around 650 to 660. Now for some potential scenarios. The bearish case, which I would give about a 60% probability in the short term, is that the current downtrend continues. If we lose support at 705, a retest of 690 is highly probable. A break of 690 would confirm the bearish momentum and could open the door to a slide towards 660. This scenario is supported by the negative news flow and the clear technical break of the previous support structure. The bullish case, with about a 40% probability, is that the 690 low marks a significant bottom and the market begins to focus on the positive analyst ratings and long-term AI growth. For this to happen, bulls need to push the price back above 717 and, more importantly, reclaim that 735 to 740 resistance zone. If they can do that, it would signal a potential reversal of the short-term downtrend. The main things to watch are whether the price can break out of its current intraday range and how it reacts if it retests the 690 low or the 735 resistance. Also keep an eye on news about the upcoming smart glasses release, which could be a market-moving catalyst. Thank you for watching this analysis on Meta here at Explain the Charts. Remember, this content is for informational purposes only and is not financial advice. Always conduct your own thorough research and make investment decisions based on your own risk tolerance. We'll see you in the next one.